Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had a great Labor Day weekend as we are heading into fall. I think this is our first DMC of the month of September. So we are getting ready. Today is the kickoff of fall ball here in Houston, and so my son gets to practice baseball, and I get to start coaching again. So one of my favorite times of the year. But I digress. Let's go ahead and dive right in. Let's get started. So we got the S&P down a little bit in pre-market trading. We did the live trading room last night. Found some pretty good trades, and for those of you that were in the room, we haven't had much change from what I talked about. So some of these lines, I know I don't like to add lines to the charts unless I do it in the room. So let me show some of the levels maybe that we identified. So in the S&P, there is the potential for price to fall from this region, but I am not shorting at this all-time high. I see a decent opportunity for a reversal right here. Keep in mind, I've got a level marked off here as kind of an alert to tell me how do we arrive when price gets there. The arrival to this level is something that's pretty important and something that I will pay attention to if and when we arrive back down into this range. I think we could get a reversal off here. This occurred right at the London market open, so we'll keep this one in play later today. Now, if we do head up, I have to tell you, I'm okay with the fact that we came really close to this and broke down because I have a long breakout above the 7,700 area. So up above 7,700, if we get a breakout to the upside, that's even better. A decent play, especially, would be as if it bases a little bit before that number, and that number becomes a stronger and more opportune breakout, right? The last breakout I think that we had was last week on a Sunday, and we broke out from here and rallied up, over 100 points. So when you get those opportunities, they don't come very often. But when we're at an all-time high, sometimes it's good just to hold on and let it run through. Am I taking any of these shorts? Once again, no. I don't feel like shorting is the smartest option when we're at or near those all-time highs. Crude oil. So crude oil has come into a level. Now, if you look at the actual level, we found it on the daily chart, actually. It's this whole area which becomes a level, which we talked about in the live trading room for a potential daily trade. However, we went and shrunk that based on the hourly chart, not even sure that this trade made sense for an entry because it was a fairly wide area. If indeed you wanted to take it, this was the area. And the reason we selected that is because it's just this green candle essentially right here before the drop out of it. Now we've come back into that region. If you take a confirmation style entry on here, which I'd be okay if you wanted to get short on a confirmation style entry, I wouldn't get short until we break below 70.9. And I think you could have a run down into this region here. So this was our, kind of what we did in the overnight hours. We rallied strong up into this area. And now let's see if we get a bit of a reversal back down to here. I'm not in love with this level, but it is a level I know that some of you are going to wind up taking. Gold. So gold, we had, kind of this triangular move, if you will. It wasn't a full descending triangle pattern, but we did get a breakdown in gold, and it's continuing its drop. I was not a huge fan of really doing much with it because my big picture is kind of chopping along sideways, but we are kind of beginning that move down. And if you feel like, okay, I think this is definitely a good opportunity to short gold, then you could look at just getting short on a rally back up into this region. If you look at that on a 15-minute chart, you've got a potential actually coming back. If you really want to tighten that entry up, you could theoretically, if it comes back, I think you could get short right here. So right at that 1200 as a resistance, you got a 1.5. Hopefully I get this video out before we get there. We'll see if I get it out before it happens to hit that level. In the bonds, we have our still bond area is the same. And then in the Aussie, we've got a level up above us that we have not yet come back into. Make this much bigger here. Keep clicking on the wrong button. There we go. Maximize sell. So in the Aussie, overnight, we rallied up a little bit, and then we've continued our bigger picture sell-off. You know, when I look at this thing on a 4-hour chart, there's plenty of room for price to keep falling. On the bigger picture chart, even on the daily chart, there's lots of room for it to keep falling. The question is, when do I get in? Well, you can get in on a rally back up to a decent point, or you can trade a breakout. I like the hourly chart that I like is still this level up here. I'm just not sure it's going to get there now or ever, frankly. It may not get there, well, ever, for a while. The other level that I liked was this level down here, and we came really close to it. So that's the problem with a strong downward move. Buying the rally or shorting the rally back up to resistance, you may not get the rally all the way back up to resistance, and that's really where breakout trades become a valuable option and a way to play one of these levels. So right now, if you wanted to short, you had a breakdown below here. Price has continued to move since then. You could take a breakdown below one of these areas there, if indeed that makes sense for you. Euro. In the euro, we had a level right here, which we got a really nice bounce off of. We're almost back to it. We've converted this to a dashed line trade, meaning we want price to come into it before we get short. I will put this up here as an opportunity as well. What I don't like is the way that we're basing in front of this level. The basing in front of the level definitely is not something I'm a huge fan of. It typically shows some more weakness. So we still have it as a confirmation style entry. We'll see how that works out. Canadian dollar. For those of you that joined in last week, we had a really nice breakdown on the Canadian dollar. If you caught that Canadian dollar, the breakdown, then you are doing what I call the proverbial happy dance. Last night, I looked at this as a potential reversal trade if price gets back up to it. Unfortunately, in the overnight hours, we did not, and it's continued that sell-off. Remember, this is what I just talked about. Sometimes you can have a really good level. The price just doesn't get back there, and that's why breakout trades become a valuable tool in a strong trending market. Last, certainly not least, Great British Pound, Japanese Yen. We have an area in the pound just below us here where we may see a bit of a reversal. And in the Japanese yen, we're still in between both. So one thing you should be able to see that's a constant in all of these is that we've got strong momentum to the downside in our currencies, and that really comes back to strength to the upside in the dollar. And if that upside strength in the dollar is going to continue, then we're not going to be able to get in on any of these currency shorts or currency longs, because that is going to, it's got an inverse relationship. So that's why we have confirmation style entries, so that we're not just jumping in and forcing a trade. So with that being said, I hope everybody has an absolutely amazing trading day. I will be back tomorrow, and until then, I will see you soon. Later.